Alright, so I'm still using SPY since I haven't fully charted it out right here. What we're looking for is 602.20 on SPY, which will get us to this area right here of about $500 to $700. Got our manual close open. Click on this here. That's our resistance right there. We're gonna lock in this amount. What we're looking for is 21,800. So a steady gain will get us there. Once we get above 300, we're gonna lock in, or 350, we're gonna lock it in. Adding another 350 to our take. There's 360 right there. Go on, go up above 5. Okay, there's 450. We'll lock in there at 450. We're gonna take that 450 for now, just because it adds another 450. Of course, it's gonna break out to the higher side like right after. But we're gonna take that 450 for now because I need to chart this out, and then I'll come back later on. All right, let's continue our charting. Get all the levels out of this. Same thing as always. Anywhere we see a lot of consolidation, anywhere we can see these double lines here. We see strong resistance, strong support. Strong wicks that meet other areas. Draw those out. And the ability to just throw a horizontal line up here is fan-freaking-tastic. You guys don't understand how much time this saves. I can literally just go down the chart, marking all my places, hitting the horizontal lines. The horizontal lines go on forever. I don't have to stretch them out. This is absolutely lovely. How much time that saved. Look how fast I got done with this. Is there anywhere else of importance? There is right here. And right here, because these two intersect. Notice I'm looking for lines that intersect with one another. And then as you go down the smaller time frames, it's going to take a lot less space on the screen and look a lot less messy. Now we're going to go down the 1 hour time frame. First, we're going to go to the right because there's other areas that we need to mark out. And this is going to become our main demand zone here. So we'll come over there, set that as our main demand zone. Mark it to here. I'm going to take this across the rest of the month. Just drag that out to forever. Our current demand zone is going to start right here. So we'll bring it from this point, this blue line, to this right there, and then you have a 50% area. I know it's larger, but demand zones do tend to be larger. Go to the left to find out where some of these other areas sync up. They do sync up here, so that's good. We do need one more right here. Love it, love it, love it, love it. Let's go down the 1 hour time frame. See if there's any other areas we need to focus on. So on the 1 hour time frame, come over here. We're just looking for lots of consolidation. This is close enough. This is, I'd say, not seeing too many that I have to do. A lot of choppiness in these hours. We do need one here. Here. Definitely need one right here. Any more we have to have? Yes, this area is a lot of consolidation. All right, anything else? Anything else? This one right here has to go. Literally the gap up. And we came down to it. This right here has to go. Oh, there's one right there. Strong levels of support and resistance is what we're looking for. We got our demand zone set up perfectly. Look how we wicked into it. All right, we're starting to break out to the upside. So essentially, I'm using the same data, and I can use the exact same moves and understanding in order to do my trades on NQ. I can use ES to trade NQ. So let's say I got in right here, right? $1,000 move, buying 2 contracts. over here, that's $1,000. So on this side, the exact same move from basically the exact same space, going in a $10 range, is going to get 2,220, and we're going up to the 200 EMA. So this would have been a $3,000 trade had I just sat in it. I went ahead and got out of it at 782, which is right about here. And my trade was worth $1,100. Could have got ourselves another $1,400. We're getting used to it is the thing. We're getting used to the movement, the pullbacks and stuff like that. So once we get used to it, we'll be able to do the exact same thing that we do over on NQ on this side. But the cool thing is you're getting double what you would get over here for 2 contracts on NQ, and you're risking the same amount basically. So you're risking $5 over here for 500, and you're risking 50 over here, 50 ticks over here for 500. So the same exact risk versus a much larger reward. Now, what you cannot do on the what you can't do on this side is you can't go below $500 really. I mean, you could, but you're talking about a super tight margin. So it's really best to keep it at about a $500 trade. So once you get a little money in there, then you can start trading the 1 to 2 contracts for NQ. But let's say you wanted to go ahead and do the 250, you can still do, since you're getting double what you were getting over there anyway, you can just trade 1 contract at 50 ticks for $250, getting you, let's say, $1,300, right? And let's start it from the exact same point right here. Buy 1, click. 1,300 is exactly where we made it to. 1,300 flat, which you can actually do flats over here, which is cool. It goes like $10, $5 every tick. Really $15. Damn it, get 1,300. I should have just typed it in. So that's a $1,300 trade right there with 1 contract versus if I was to go over here, the same exact deal and do the 1 contract, buy 1, same exact parameters, I'm getting $500. So essentially, if I get all the way up to the top, I'm getting $630. Essentially, you can double your money with the exact same risk from over here. Let's show you. You guys see the stop loss is way down there. Do the same thing. Buy the 1, 50 ticks. Look at how far down the stop loss is, and look at how much profit you can take. And let's say I went out the body of the candle because it started to reverse right there, right? 1285 versus 650. So 1 contract versus the 1 contract on the other side, risking $250 in both trades. So you basically have the same exact parameters of loss, but double the increase once the trade goes in your favor. Now, early on, you'll see, let's just do this 1 candle right here. Let's do candle body to candle top, right? Let's say I did 1 contract. Same exact loss parameters. Bring this down to about 80. So right here in this 1 candle, we'll get 225. We're going to do the same thing over here. Candle body to candle top. And we're going to come down to it. And you see we get $87 from that candle. Isn't that crazy? The difference that we can get. Exact same moves. Exact same moves. Exact same analysis. Completely different turnout. $225, $230 to an $87 move for 1 contract. So 1 contract over here on NQ is more than enough. You have the exact same risk parameters. I cannot stress that enough. You're using the same risk parameters that you're using over on ES, but your financial gains are much larger for the exact same moves. One thing to note, right? The moves seemingly take longer on NQ. They're not actually taking longer. It's just a much wider range than you're used to when you're on ES. So you do have to have a smidgen up more of patience. But in reality, you're going the exact same distance with NQ as you are in ES. So if you go to the 5-minute time frame, you'll see it's really just 5, 10, 15, 20, 25, 30, 35 minutes. And it's the same thing over here, but it looks like you're going much further because of how wide these numbers are when they're going. But you're doing the exact same $10, $15 range that you were doing before. Another thing to note is that every 10 ticks is $100. So over here to get $100, you need to go 10 ticks. 10 ticks is 30 to 32, so it's really just a $2 move.